What's going on, guys? Welcome back to the Coindesk podcast. I'm your host, Luke. This show is the best place to keep up with everything happening in the crypto market, having on the biggest fund managers, analysts, exchanges, all happening right here, bringing you the goods. If you're new here, hit that subscribe button. If you're a returning watcher, welcome back to the show. It's always nice to have you. Today's episode, kicking it off with a crypto professor. He teaches about Bitcoin and investing in Bitcoin to a college class. An insanely cool story. He also works with Wavewave Financial and has experience trading options in the market. So if you want to understand what options are telling us about the market, or you just want to understand how you can take a college class about Bitcoin, check out this episode. It was a ton of fun to record. A lot of good insights in there for all the traders and investors that want to know what's happening. The market's insane right now. So these episodes are going to be a lot of fun to record. So much good stuff coming in February. So stay tuned, hit that subscribe, and I'll see you guys soon. Before we get into today's episode, one quick message. Some companies that make this show possible every single week. I'm going to read through them. eToro, check them out if you're based in the US, the worldwide leader in copy trading. Their copy trader feature is amazing. You can copy traders on that platform. Check them out. Link is right down below. Also, Bybit Exchange. If you trade Bitcoin, ETH, XRP, all those contracts with leverage right down below. It's the best margin trading platform. They also have a mobile app. Click down below. You get a deposit bonus if you use my link below the video. And lastly, CryptoTrader.tax. If you've bought or sold crypto at all in 2019 or in 2020, you need to use CryptoTrader.tax. Free to get set up, takes 5 minutes. Go to the link right down below this video, import your trades. They spit out your auto-filled reports. Thank you, eToro, Bybit, and CryptoTrader.tax. Now, let's get into the show, guys. I don't want to waste any more time. Enjoy this podcast. You can always listen to the audio version. iTunes, Spotify, link is right down below as well. Enjoy the show, and I'll have more good stuff coming your way.
Ladies and gentlemen, it's time!
Welcome to the show, Tom. Today I was actually your guest, your platform.
That's right,
your lecture.
How about it?
It was pretty fun.
The other side of the table.
Yeah. Thanks for having me to class. How did that even come about? How did you convince or get the opportunity to let a university teach a Bitcoin class?
You know, the best part about this answer is they asked me.
That's insane.
I love it.
Yeah.
I love it. I mean, talk about leading indicators of adoption, right? I got in touch with, there's Professor Lena Martin. She's a great advocate. She raised some money from Pepperdine. She got a grant, $100,000, and she's doing an undergrad class around like blockchain fundamentals. So she got in touch with me to kind of get involved in what she was doing. And then, Wave Financial is hiring. We're growing our team, and I reached out to the recruiter at Pepperdine because it's my alumni.
Yeah.
And a few days later, I get an email from administration at the school, and they want to meet with me, and they want to talk about what I'm doing, what they want to do. I go to lunch with the associate dean of the business school, and they have a few benefactors at the school that are from traditional Wall Street, also dabbling into crypto capital markets, and they have this concept to bring more attention, whether it's like a blockchain lab or some sort of crypto, research program, PhD program. But they were asking me, like, how can we help develop this? And I was like, I'll teach.
Yeah.
Let's do it. Let's do it, right? Because I mean, the
in.
adjunct, to teach adjunct class, it's 4 days a week. It's 4 hours a week, 7 weeks. It's fantastic. We were talking before, like, it's, the thing about this space is that, it's so new. So the people involved, like, we have so much pent up knowledge, and we have ideas, and we share those ideas amongst each other. Sometimes we'll, prophesize to our peers and our family. But really to have have a class of eager, smart, excited, motivated students who are hanging on every word.
Yeah.
And I can just spout and ramble and go through all my ideas and go through the history of money. That's awesome. That's awesome. And they love it.
Yeah. It's got to be the most, I was saying earlier, it's got to be the most entertaining, interesting class they have. I mean, learn your first course, What is Money?
Yeah.
Then you have Jimmy Song in. A ton of guests still
Yep.
lined up.
Yep.
Who do you have next week?
Next week we
Fidelity's-
have Tom Jessup.
Yeah.
Fidelity.
Yeah.
Icon of I think institutional adoption. But yeah, it's the other cool part is I have a textbook, but like it's sort of weekend reading material.
Yeah.
My lecture is just like my brain. And how fun is that, right?
It's
you can
amazing,
just
yeah.
sort of like the sounding board of saying, like talking about what I've learned
Sure.
and observations that I've had and conclusions that I've made. And I make it so that it's balanced, but digital assets finance has a lot of roots in economics, financial markets, investing. Like it's it's a very straightforward, it's the most straightforward segment of crypto.
Sure.
Like easy to understand, right?
Yeah.
You have trading platforms, you have assets, you have capital, you have deployment. And where like it's, I didn't get into like, hashing algorithms too much. I didn't get into sort of, DLT and interoperability. Those like very scientific aspects. This is a finance class.
Exactly.
Right?
For a business course, modern portfolio theory,
Right.
understanding store value,
Exactly.
thinking about stock to flow, which we covered
Yeah.
today. I mean, why was this not a course 2 years ago?
I know.
I was sitting in that. That's the one class I went. I think I went to 3 classes. And then it was end of the week. I was like, you know what? I think I'm going to go to this conference. I think I'm
Right.
going to pursue this. And I left. And it's hilarious to end up there 2 years later, but it was fun.
Yeah. Well, I told Luke not to persuade my students to drop out because I won't be invited back. So follow his word, not his footsteps.
There you go. I miss the campus. That's the one thing I really
man, it's
realized
beautiful.
today was I wish I
Just-
would have spent more time there.
I mean, endless ocean views.
It's insane.
Whitewater surf. It's the place to learn, right?
It's insane. We already covered the guests. How'd you get in the spot then to be the one that they call on to be the teacher, right? How did Wave Financial get set up? What were you doing before this, I guess, to get into the specifics?
Yeah. So let's see. Let's go back. I've worked in finance my whole career,
Yep.
and then did investment banking, private equity, and then I wanted to like run a company. So I got involved with this e-commerce outfit, and I did that for 5 years. Mainly travel e-commerce, internet marketing. But we were this company had gross credit card collections of about $100 million. We had revenues of 20 million and pretty fat profit margins. But collecting that much in credit card fees, I'm talking about 2%. I'm talking about somewhere between $1 and $2 million of paying to the Visa, MasterCard overlords.
Yeah.
So I would constantly be looking like if we can optimize that cost, I can still pass down those charges to my vendors. But if I can optimize that cost, that's profit margin.
Yeah.
So how do I what is the solution to cutting payment? What's a more efficient way to handle payments on the internet?
Yeah.
And like literally that was like that was a phrase that I typed into Google search. And like I got Bitcoin as like the 7th result. And this is like early 2015. And I was like, all right, what do I do with this? So dive into the rabbit hole, right?
Exactly.
At the time Coinbase had the Coinbase Commerce, I think it was called.
Yeah, it's still called Coinbase Commerce.
Is it okay?
Yeah.
And drop a pixel in your checkout and people can pay with crypto. All right. So adoption was low at the time. So I brought it to my board and I was like, guys, we have this new option. We could have adoption. We could find users and it would cut our costs dramatically. Those costs would be straight to the bottom line.
Yeah.
My board said, no, absolutely not. And they told me to stop talking about it and thinking about it. Stop thinking about Bitcoin. Okay.
Easier said than done.
So I go home. I go to bed. And I'm just like, eyes wide open.
Yeah.
I got to do something about this, right? And that was my journey to like, okay, I need to get educated. And nights and weekends, reading papers, reading a lot of stuff. And getting to the point to where it was very apparent that these were two things I understood. I understood finance and banking. I am still a bit, jaded about the financial system. I worked for Bank of America for a number of years, and seeing how the sausage is made is, there's pieces of rat in there.
Yeah.
So, and then working, running an e-commerce company, I understood, databases and API communications and how data flows. And I had enough grasp on that to conceptualize what a money over IP, how that could work.
Sure.
And that's the biggest barrier, right? It's like, it's not sort of the persuasive nature of like, hey, you gotta get on board with this. It's your internal narrative to say this might have legs, and to get there, it's a long road. You have to challenge yourself. You have to ask really hard questions. How can code be law, and how could these bits and bytes be so secure and protected? Like that's very difficult concept to buy into.
Yep.
And if I got to the point to where I'm like, I'm going to make this my career. So I needed to have all those data points to make such a big decision. So anyways, I worked towards the end of the year, worked on my exit out of the company, and I quit without having a job and a wife and a young kid.
There you go.
And I'm just like, I'm going to make something out of this. And so took some time off, and that really opened me up. And this was beginning of 2016. We get into the summer of 16 with the Ethereum launch. And just following that and being a part of that was really monumental, and just in terms of my thinking and my buy-in into this. And the idea was to just take a couple months off, figure out my next gig, and I messed around with a startup, and I had this company called buysell.com, BYECELL.com. It was a cheap domain. Yeah. And it was an Ethereum contract for trade finance, and it was basically like a if that then this contract. It was super simple. Went out and pitched it, talked to people, talked to some VCs, and they just don't get it. And so I tinkered around with things like that. But as time went on, I had money reserved for this startup. That I really just then allocated to Bitcoin and ETH. Yeah. And this is, early 2016. So my 3-month mid-career retirement turned into 2.5 years.
Well, longer than that, because now until
I'm working now. Yeah, I'm on payroll. So, the retirement's over, but yeah, I mean, it was a wild ride, and I got to enjoy, 2017 from the seat on my couch.
From a nice spot.
Yeah.
One of the most amazing things about experiencing your class today was you mentioned you had to take some time off, you had to think through these, you had to have that experience beforehand to kind of understand the opportunity, understand what you're working on. I think for a lot of the students in class today, it's almost like they're getting a fast track to what took a lot of people many years and is still taking people a lot of time, and it's going to take them as well. But it's like having mentors in, developers, people running exchanges, all those different things, and giving them a structured course. It's powerful to watch. And you can see everyone's very engaged. I've never sat in a college class that was like that. I mean, most people are falling asleep looking at their phones or something like that. This was like,
all eyes.
It was different. It was a different vibe.
Totally.
Yeah.
Well, and I mean, they're also coming into this with no baggage, right? I had tons of baggage around like, how does money work?
Yeah.
Right. What does the financial system look like? What are the constraints behind like internet security? Like I had all these things that I had to somehow overcome. Right. You know, younger students, younger professionals that don't have that baggage.
Yep.
So that they're coming into this, I mean, literally like crypto native, like, and so that's what I'm trying to instill into them. Like, you know, they don't know what's broken with the system.
Yeah, that's true.
Let's get them on the track of fixing it, right? So it's and that's, I mean, the best founders in the world are ignorant by design. And what I mean is they don't know the rules that they're breaking. And that's super powerful, right? They don't have all the people telling them no. They don't have all the people telling them that you can't do that there's a system set up in a different form and you're doing something very different, right? Mm-hmm. So the best entrepreneurs are the ones that are ignorant to the constraints in our world. Mm-hmm. When I look at this, you know, I've been in this, you know, worked in finance for, you know, over 20 years. And I'm kind of like a credit risk guy, so I'm like always trying to poke holes and how am I going to get effed in this deal, or like how is this going to go sideways? But I mean the best entrepreneurs are the ones that just sort of put those blinders on, find an opportunity, and just go.
Take it.
Right,
yep.
Right. And there was a really good quote. The guy from Wire, the founders. He's an Australian guy, but he said regulation clarity is the worst thing for a fintech entrepreneur.
Because he has a very clear path of what he's allowed to do, what he's not. It kind of creates a boundary.
Then it's already done.
As opposed to
it's already done. But if you have that,
the opportunity has already been grasped.
Yes. Yeah. If the space is opaque and the regulatory environment is uncertain, you run with an idea that sort of pioneers, or at least looks further out, looks down the road, and maybe it works, maybe it doesn't, but that's the opportunity for the land grab around what's possible in the future, right?
Sure. It's part of the risk.
It's part of the risk. So here's the land grab. You guys ready? The accredited investor rules are changing, and we just got clarity a couple weeks ago on how they're changing. You know how they're changing?
I didn't see the whole thing. I saw Pomp retweet it. That's about as far as I got.
Well, here's the detail. Detail is, in addition to being, you know, wealthy and, you know, super smart because you have money for some reason, there's going to be an exemption for financial professionals that have Series 65, which I hold, a Series 7, which is like a broker-dealer.
Yep.
And the other one, I believe, is the 24, which is a private securities professional.
Okay.
So if you have those three, if you have one of those three securities licenses, then you are exempt from accredited investor. Right?
Yeah.
This change is to be discussed. This change has been presented by the SEC, but they haven't ruled on it yet.
It's knowledge-based instead of just strictly asset-based now.
If you have one of these three licenses, then you're exempt, right? Okay. So, with that said, what businesses can you build around financial professionals that have less than $2 million in assets and $200,000 in income? Now they're open. You know, I think of crowdfunding, but crowdfunding directed to financial professionals. Okay. You're now going to have a new investor base that didn't exist yesterday. Yeah. The rules are not in place. They're being discussed, but they're going to happen.
But it's there, yeah.
So someone in this audience, please run with the idea to crowdfund, raise capital from financial professionals that are now able to deploy capital. Right. I don't know what that looks like, but this is the sense of like, we didn't have regulatory clarity on that topic, and now it's starting to take shape. Yeah. So that's all about fintech is just getting ahead of that.
One of the opportunities we were talking about in class, thinking about deploying capital, specifically in the crypto space, we were talking about the evolution of the crypto asset market and how trading and investing, some of those opportunities that existed in 2017, the ICO boom, now into a consolidation of mostly Bitcoin-focused strategies. The students were having a bit of a laugh about that, some of the ICO stories.
Yep.
You're specifically
Luke had some good ones too.
Yeah.
What drives the price of an altcoin in 2017?
Yeah.
You could. The
list goes on.
The list goes on.
None of it are fundamentals. Of the approaches that excite you now, though, right? This isn't an ICO landscape anymore, and things are evolving. A lot of people looking at options and more of the option infrastructure, and really just Bitcoin infrastructure that's available to investment managers now.
Sure.
What excites you about some of the approaches that are available now? I know you played in options before crypto, and now you're also doing it. Is that mostly what you're focused on now with Wave?
That's right. So Wavewave Financial, we have a team here in LA, and we registered investment advisor. We have an active management style with our venture style hedge fund, Wavemaker Genesis. We have more passive private funds, Reg D offerings. And then we have the treasury management. Treasury management is sort of like bespoke, fee-based management, and that's where I play. But here's so right now, like we have very we find an opportunity of high demand for people with specifically Bitcoin, but also some other top 10 digital assets to actively manage. So lending, not DeFi, but it's more CeFi, call it. Lending, collateralized lending, and to generate yield. And then we have, we're in the options market, things around like covered calls, and I'll get into that. But I want to kind of step back for a second, right? I think there's 3 profiles of financial professionals in crypto, and everyone has their contribution. The first is, let's go with the crypto native, right? You just came out of school, you know enough to be dangerous, you're super smart, and then you go to work for Coinbase or some of the exchanges.
Sure.
You don't really you see this future architecture, and you see this future in financial services, and it's so exciting, and like the sky's the limit, and I see that too. But you also, that serves the current crypto native community, and that's good, but that's a limited market, right? That's a limited TAM, right?
Yeah.
So that's number one. Then you have guy number 2, right? And these are like, I put like the big banks and even big investors to say, you're from traditional finance, and you're sort of either supporting the system, through like exchange, like something like the CME and all the people supporting that, or backed. And then we get into like Fidelity and TD Ameritrade. They're doing very cool things. They are coming at from a call it analog native view, right? And they're saying, hey, I know how the traditional financial stack, I know how it's organized. I understand all the compliance and regulation, and I'm going to try to fit this crypto thing into that, right? Yep. And that has merit as well, especially for sort of easy applications. We, in our team, we have some, really sharp guys, Dave Seamer, Ben Tsai. I mean, we're coming at this as we're former bankers that sort of, went all in on crypto 2-3 years ago, maybe 5. I got into it like 4 years ago. We went all in, right? We knew the legacy stack. We have, I do have some of that baggage of like, what we can and cannot do. But we went all in into native crypto to say, okay, this is the movement. And now we're like, okay, how do we meld these worlds together? Yeah. And it's tough, right? We talked about this before. I mean, this is low, guys, guys, I've done a lot of work with the guys at Consensus, and Joe Lubin and Andrew Keys, and they have taught me that this is such low-level foundational infrastructure. You have to tear it apart in order to make it work. You can't patch these systems in. And that's difficult, right? It's difficult for legacy systems. So kind of full circle. So now we're in a situation where like we are the crypto native guys. That's our investor base as well. But now we're trying to tap into these traditional, this traditional system. So
what's some of the problems with that? This was maybe the most interesting to me because I hadn't heard this.
Okay, so this is fun.
About the problems with Backed and CME, right?
Or the challenge. Let's go with
challenges, right? How are crypto investors interacting with this? How does Backed do a week with 0 contracts traded last week?
Yeah.
How does that exist if there is this demand, if there is institutions?
Okay, so let's start with profile number 1, crypto native, right? And that's, I look at you, right? You're in that category, and that's awesome.
Sure.
How long does it take to open up a Deribit account and start trading?
Well, if I'm in the U.S., I couldn't do it. But if you wanted to, I'm saying other traders can open up a VPN. You can get to any exchange 5-10 minutes.
Yeah, 5-10 minutes, and then 6 confirmations.
Sure.
You got money in,
sure.
Right? And that's the largest liquidity pool in options globally.
Deribit, BitMEX.
Yeah.
Yeah.
It's awesome, right? Instant access. And that's what this is about, right? Instant access, liquidity. This is what crypto assets enable because you can move money around the world. Let's take profile number 2, right?
Yep.
The banker.
This is where we run into problems.
Let's do the banker, right?
Yeah.
The banker. You say, okay, hey, I want to trade. I've heard a lot about CME. There's a lot of price discovery there. Let's go. Let's onboard. Okay. Step 1. In order to, first of all, you don't interact with the exchange directly ever, right? You're not facing, Arthur Hayes. You're facing a guy who faces a guy who, get access to the exchange, right? Okay. So you need it's a FCM, Futures Commission Merchant. So you have to hire a Futures Commission Merchant. That's the settlement layer. And everyone, CME is it's about leverage too, right? It's 40% margin. So you need to apply, and it's a credit. Like they're going to underwrite you as a credit. It's not just an application. So they're going to underwrite you as a credit. They have minimum fees. Some of them are in the $5,000 a month. They have commission fees, very low. Mm-hmm. And the commission fee on the contract's like $5. I don't know right now. But they have minimums, so you're going to pay them $5,000 a month, and you have to go through. Okay, so that's step 1. Great, you applied. I apply for credit. I get the credit. I pay them up front. Great. Step 2. Okay, how do I trade? Okay, you're going to need a software integrator. You're going to need a window into, and visualize. Remember Microsoft Office in 1994 where there's that annoying little clippy thing?
I was born in 94. So
okay, you wouldn't, yeah.
I do know.
Holy moly.
Clip, but
the clippy, God, I wanted to murder that little thing.
I've seen the paper clip.
Yeah, you've seen the clip. Yeah, it'll never go away. It's almost like the Slack bot. I can't get rid of the Slack bot. Clippy.
You got to get rid of Slack.
You got to get rid of Slack. Visualize what a Windows 94 system looks like. And that's the software that you have to integrate into in order to trade through the FCM to get access to the exchange. Okay, so I go to them. This is like the most archaic software in the world, and they want $1,500 a month for licensing to get trading access. And I'm like, they're telling me about, you can do this charting, you can do this. I'm like, I just want access. Yeah. I want to be able to push a button so I can buy, so I can buy options and futures. I just want to do it. Yeah. Okay. So I got to sign a contract for software from 1993 that then links into my FCM that I'm paying commissions to. I'm not really sure what they're doing. And then at that point, I can then get access to the CME. Okay.
That's through 2 other people.
So that's just one hoop, right? One hoop. So, we have, we have a client that has they have Bitcoin, right? They're our clientele are crypto native. They want to allocate Bitcoin, right? Want to do a covered call strategy. We'll talk about why that's important. So I go to the FCM. I said, all right, we're going to fund this with Bitcoin. He's like, whoa. He's like, we don't have wallets. You got to send dirty money. Put it in a suitcase and mail it. And I'm like, he's like, you have to fund this account with fiat. I'm like, we're not going to do that, right? Like, that's not part of this whole strategy. No, we can also create this tri-party agreement with a custodian to where we would have an escrow. And I'm like, all I want to do is buy options, man. Yeah. Like, you go back to the Deribit and the BitMax, sure, like there are regulatory constraints but holy moly, like that's.
See, it's seamless.
Not only is it seamless, but like this makes me more excited about the movement that we're a part of, because we're disrupting that legacy stack, these barriers around middlemen and commissions and licensing agreements and use open source software to connect into peer-to-peer markets. That's all I want to do, right? So then, let's go back to CME. I'm not, and I think CME is a great, it's a great price discovery mechanism, and there's volume there, and it allows for more institutions to have access. There's a but coming.
What about Backed? Is that an improvement? We can finish the CME, but
Backed is an improvement, but like we're playing in options, and I'll tell you why. But if I saw a call option on Backed, one, I can't fund it with. I have to fund it with fiat. But the option is on their futures contract. It's not on the price of Bitcoin.
Yeah.
So when I settle the option is settled into the future, and then the future is settled into either cash or Bitcoin. It's hard for me to understand, and this is my job, right? It's something like we trade on LedgerX. LedgerX is great. I wish there was more volume there. It's physical delivery. I have a contract on 5 Bitcoin, and it's going to settle 5 Bitcoin. There's no argument around price discovery. There's no oracles. There's you have the option, not the obligation, to buy this Bitcoin at this price, or buy this Bitcoin at this time, right? It's very simple, and that's why I like the LedgerX. But now you have these futures contracts that settle with this through FCMs, through integrative software, through.
It's tough.
It's tough.
Is it mostly just U.S. firms that are going to feel that pain? Because mostly everyone else, I can't say everyone else, OFAC countries are on the list, as well as the U.S., can just play on Deribit, can play on BitMax, play on,
Yeah.
Is the U.S. ever going to let, or other companies, exchanges, going to let the U.S. in, or it's probably just too much of a risk for them?
So
when does this become easier?
Yeah. Gosh, I wish I had the answer. I will say this, that, I've seen recent studies around, a majority of transactions value and even fundraising, but specifically Bitcoin transactions, is happening in the United States. A lot of it's happening here. So let's not ignore that, right? Yep. Yes, we have a regulatory regime that is from 1933. Forget about my Windows, software that from 1993 I have to deal with. I have to deal with laws from 1933 that were made in reaction to the Great Depression. That's not relevant to today, right? Let's start there. But here's where I don't know if it has to change, because I'm hoping, and we've been hoping, this was me in late 2017, I'm hoping for more institutional adoption. I'm looking for more, institutional fund flows. Many institutions, hedge funds, pension funds, professional money managers, they need to jump through the hoops that I just described. That's part of their program. It's designed to suit their existing stack, their existing infrastructure, their compliance. So they can use the same terms. You talk about T+2, right?
Mm-hmm. That's just what they
use
for everything
2 days
else.
later. Like that's sort of ridiculous. So you have to wait to get your Bitcoin for 2 days. Should be 6 confirmations. But it's not so foreign to a hedge fund manager because that's what they're used to on their traditional assets, right? So, this is where I come back to these different profiles, the crypto native guy and then the legacy. Well, the legacy guy is he's like, I want exposure to this asset. And I'm used to jumping through these hoops. And our systems are set up for this, right? They already have the FCM relationships. They already have the crappy software. Like this is new to me because I'm coming the other direction.
Yep.
So it's not all that bad, right? It's not all that bad from their point of view.
From the legacy, yeah.
Right. So, I don't think that one day, like CalPERS is going to wake up and be like, you know what, we need to trade 100x leverage perps on BitMEX. like
it's never going to happen.
It's never going to happen. Yeah. It's never going to happen for so many reasons. But the first reason is, that is not the path to adoption that's going to occur. They're going to go through these legacy channels, and Fidelity is setting up that way. They're doing a good job of suiting these type of investors, and one might say that it does have those hoops to jump through, but that's a system that they're used to. So
sure.
But I just like to outline it because I'm so excited about like things that like Coinbase, and things that like Tagomi and all these other firms that are working on that are, compliant by design, but it doesn't fit into that traditional stack, right? You don't combine custody and exchange with the same umbrella. So I think Coinbase has some headwinds there for, and that's why you look at some of these like looking at qualified custodian that plugs into regulated exchange, something like ErisX or even LedgerX, and then you have settlement layers that are being designed where you can officially manage liquidity. Like these compartmentalized services that are required for institutional investors, they'll likely have more success than the all-in-one
umbrella
one stop. Yeah.
You mentioned for your clients that options is a strategy that you pursue,
Yeah.
and that most of them, you could say all of them, but most of them will not be playing the 100x game on BitMEX or on Deribit or wherever else. Why is it that you focus so much on options, or why is it that your clients specifically focus on options? Yeah,
great question. So this kind of comes back to, part of the reason why we set up a treasury management business. We saw the amount of capital that was allocated to computer scientists without having CFOs, without having accounting firms, auditors, and we've seen some of those stories unfold. But we saw an opportunity to say, hey, listen, for like an ICO funded project.
So an ICO treasury.
An ICO treasury, ICO treasury management. So we can manage fiat, we can manage digital assets. So here's the first question that I ask an ICO company, or ICO funded company, right? Why do you hold crypto on your balance sheet? And many of these already have a native token, right?
Sure.
So you already have exposure to the markets, as you elegantly described to my class today at Pepperdine, that many of these digital assets are correlated, right? So you could say project team, they have a native token, and then they also have Bitcoin and ETH on their balance sheet.
Yeah.
If Bitcoin moves, you could make a case that so will their native token. So, and this is value on their treasury. Okay. So, does Facebook have Amazon stock for cash? Does Facebook have 80% of their cash in Amazon stock? No, because that's silly. You need cash to pay your employees.
To have a runway.
One,
Yeah.
you need runway, but then think of the correlation, right? If Facebook stocks tanks, now in their treasury they have Amazon stock. That's gonna, so the nature of project teams having crypto in their treasury, for me, using
It's like
diversification,
leveraging up there.
it's not prudent investment management. It's not suitable for them. And it's not suitable for their community. It's not suitable for their employees.
Yeah.
Because these teams should have the 3 to 5 years of runway of funding to pay for payroll and pay all the marketing expenses, all those things totally charted out. Now, if you take risk on an investment, you need a long timeline, right? If you own crypto, you should be ready for a 5 to 10 year run.
Sure.
Because it's going to go up and down like crazy in the interim. But if you have to make payroll next month and you're relying on cryptocurrencies to fund that payroll,
Good luck.
you could give out bonuses next month and cut half of your team the month after. So we talk to a lot of project teams, and this doesn't, what I'm saying doesn't always resonate, right? Like, you get guys who are just like, you get teams that are just like, listen, we believe in this movement that we're a part of, and, we were funded in ETH, and we're going to hold that ETH, right? And that worked for some, and that didn't work for us.
It works in the bullish cycle,
here's
and it
where,
doesn't in the other.
So, other than going to a founder and saying, sell all your Bitcoin tomorrow, and, just have exposure in your native, we make a compromise, right? So this is where like the options. So we have a strategy of selling covered calls. Covered call is essentially you're selling a contract for the buyer of the covered call has the right but not the obligation to buy your Bitcoin from you at some future date, and they pay a premium in order to have that right. It's sort of like, it's like a rent to own, right? I'm going to reserve the right to potentially buy this Bitcoin from you at some future date. This works well for like an ICO funded company. Here's why. Sure. One is you're holding the Bitcoin. Let's put it to work. So if you sell a covered call option, you're earning a premium. People have to pay you for the right to buy your Bitcoin from you. So you can earn anywhere from shorter dated stuff. It's like 2% per month. That's a lot. That's real money. Longer dated, higher strike prices. It minimizes down to call it like 10% per year. If you're going to hold the Bitcoin, you should optimize it and you should make money, right? Here's the second thing. If you sell covered call options, two things can happen. One, the contract expires and you earn the premium. Bitcoin goes flat or goes down. If Bitcoin goes up, let's say it goes up by like 30%, and your strike price is 20% of the money. You're going to make the 20% upside, and you're going to collect the premium. And you know what else you're going to do? You're going to be able to tell your employees and your community that we sold our Bitcoin at a higher rate than current market price. They did good by you.
Sure.
And by earning the premium, you have cash flow, so you could hire another employee. And if those options are called, then you sold at higher price than market. You should, in my opinion, you should be selling all of that Bitcoin, because that's not your business. You're not a hedge fund. You're a tech shop, right? So it's for me, it's sort of a double whammy. And here's one more point on this. I was working on this deck to a team, and I called our approach proof of fiduciary. All right, I'm just grabbing this proof of blank moniker, but proof of fiduciary. So here's the approach. We're Wave Financial's registered investment advisor. We are a pillar of compliance, and we manage client capital. We have a fiduciary obligation to serve our clients, which means by law I have to put their interests before my own. Right? That's a law, and that's great. It's great that we have that. There's a lack of fiduciary responsibility in the crypto space when funds are raised for for tech development based on a schedule and deployment and meeting goals.
Yeah.
Those goals are not always met, and that's frustrating for me. And those goals are often, the target is changed, and the outcomes are different. And I've seen it a lot. I've seen some deliver. I've seen more than that not. So, we're seeing the SEC really crack down on these offerings more and more are coming. It's never too late to be a true fiduciary of your investors' capital. And you might say, hey, they invested in a foundation. These are charitable contributions. I have no legal recourse to them. And legally, that might be true. But in the eyes of, investors who may get hurt and the regulatory regime, that doesn't fly. So this is I'm still marketing. This is my marketing approach. But the marketing approach is, hire us, right? And we act as fiduciary to you, and we help you act as a fiduciary to your investors in your community, and disclose your investment holdings and outline where the capital is being allocated, and work on different programs. So I'm working with a couple project teams on transparency reporting for their community. And this is why I like things like Masari are so exciting, because it's like we have to self-govern compliance in this space. The SEC is just telling us what we're doing wrong. They're not telling us what we're doing right. So there's a lot of self-governance that's required. So, I challenge founders to sort of look at, how you manage capital, and in hindsight, if someone were to say, did you serve your investment community with their interests before your own? I really hope that you can say yes.
Yeah, I'm not sure how many can, but it's definitely something. I think a lot of teams got put in a place of, we're a tech company, now we're half hedge fund as well, trying to manage this treasury, and we're not suited to do so. So I found that side of your business pretty interesting. Within the options space, I don't look at options or implied volatility studies too much, but one of the things we were looking at in class was, I thought was quite interesting. People were talking about the halving a lot and volatility picking up and what the potential price can be in June and September. And obviously no one knows. We don't even need to talk about whether or not it's priced in. Right. But one of the things you noticed was volatility normalizing with these options coming out, with these implied volatility studies coming out. What did that 6 and 9 month volatility look like? You said that people weren't willing to pay more for that 9 month. Can you go into that relationship a little bit?
I mean, look at this is actually Ryan Anderson on our team. He's super bright, and he outlined in our monthly update you can find on Medium is that we're seeing a traditional smiley face in the options curve. And what does that look like, right? It's you have lower volatility for short dated contracts, which means I have more certainty that Bitcoin's going to close at a certain price in a short-term basis, right? And then so that's sort of the downward sloping. Where it goes upward sloping is to say, 3-6 months out, I don't know where Bitcoin's going to close, and that's essentially volatility. It's how much you get paid in that premium to have to wait until that time to resolve your Bitcoin at a stated price. And that's, volatility is a feature, not a bug of Bitcoin. And I'm ripping that off from, smarter guys than me. And this plays out well in the options market. But here's where it's really funny, and Ryan pointed this out. If you look at volatility, if you look at implied volatility, at the June expiration, and you compare that to the volatility at September expiration, there's no increase. No one is getting paid more to go out 3 more months on the unquestionable and lack of fundamental driver of value of Bitcoin over a 3-month period. That's astounding. And what that tells me, in the short, this is sort of it's a window, and this curve changes, but the market won't pay you for volatility past June to September, past the halvening to September.
Because there's that much uncertainty, or because people think if the move happens, it's going to happen in June? What do you interpret that as?
I interpret it as there's a lot of uncertainty from now until the halvening.
Sure.
And that's priced into the June contract. But after June into September,
no one was willing
it's the curve flattens. So you're not getting paid more to go out to September. And I think that's a glimpse. That is a glimpse of further declines of volatility in Bitcoin, further normalization of prices. We're seeing more short sellers come into the CME contracts, institutions, leveraged funds. We're seeing Bitcoin mature and normalize and stabilize. Now that's going to come. I think that's good on the whole. But for one, we're going to have a tough time in the options market because we're not getting paid for the volatility. So that premium is going to go down. And we, with normalizing volatility, you're going to see a lot less price spikes, as we've witnessed over the past few years. Mm-hmm. Honestly, I hope we get to a point to where we have 20 to 50% price appreciation every year, and then we get 5 years out, it could be 10% per year. I think that's what we're facing. And that will bring in so many more market participants that are scared of volatility, but they love the store of value thesis for Bitcoin.
Yeah.
This happened with gold, right? You saw the charts that I put up for the students.
Sure.
I showed him this big scary chart of price, exuberance, declines, crash, and it was gold.
Yeah.
They didn't know. They thought it. Everyone thought
Bitcoin.
They thought it was Bitcoin.
I'm gonna flash that on the screen.
Yeah, actually, that's
watching this on YouTube right now.
Dibs to the Bitwise guys because they had that in their deck. I sort of masked that. And gold went through after the gold standard. It went through the same pattern, abate over a longer period of time, but this intense volatility followed by stabilization.
Normalization. Yeah. One of the things that stuck with me thinking about that chart, I also thought that chart was Bitcoin, but people's reluctance to get into Bitcoin because it's too volatile to be a store of asset. I think back to this essay, Parker Lewis. I think he's one of the best writers in Bitcoin. He has this article and he looks at volatility not being a good measure of whether something's a store of value. I said this in class. The dollar has lost, it consistently loses value over periods of 10 to 20 to 40 to 50 years, especially your lifetime. If you're acquiring cash, accumulating cash, you're losing value. The dollar is not very volatile day to day, month to month, year to year. Look at Bitcoin, right? Look over a period of year to on day to day, week to week, Bitcoin's very volatile. Over a period of 3 years, 5 years, 10 years, great store of value, right? So it's a weird thing where changing the time horizon a little bit is like, ooh, maybe short-term volatility doesn't correlate to whether or not this is a good store of value. Right. But I do think normalization helps no matter what. Yeah. So I like that relationship you pointed out. Trying to think, Tom, is there anything else we wanted to cover from class before we wrap things up? Are you going to keep doing this this program going forward?
I tried to.
Who's the professor? We talked about this. This is going to happen all over the United States, I bet. Who's someone else wants to start one in Boston at MIT?
Yeah. I mean, there are like Coinbase did a great study on educational programs across the country. Pepperdine will definitely be.
Are you the first?
No.
Really?
There's tons.
Okay.
There's, Stanford, Berkeley, Cornell.
I knew they had Bitcoin clubs.
MIT.
I didn't know they had actual courses.
They have. Many of them are more computer science focused.
I see.
There are a lot of, so it's there's, maybe in the show notes, but the Coinbase educational study, but it's, the top universities have a lot of programs, starting with computer science right out of the gate.
Sure.
I think law is the second. and then there's finance and economics.
Yep.
I don't know of. I've reached out to a lot of professors to kind of just like get some notes and cross pollinate.
Yeah.
But I don't know of many other finance classes that are teaching this. So I mean it's and here's the other cool part about this is that like we talk about portfolio management, alternative investments, right? This fits. You talk about performance metrics.
This fits.
Sharp ratios, right?
And this makes it very exciting.
Absolutely.
Talking about those
you talk about technical analysis trading. This fits. You talk about financial infrastructure, derivatives. You talk about sort of a new paradigm around custody. Like this class was really easy to sort of compartmentalize because we covered a lot of financial theories and a lot of financial market education, and we're inserting Bitcoin as an asset class. We're inserting digital securities. So it's very relevant. I mean, I think with something like computer science, we come back to like this low level foundational open source software is a newer paradigm.
Sure.
You have to rebuild things from the ground up. When we look at this as investors, right? This fits a mental model for traders, for long-term investors, for store of value. This fits those models. So it's it was a pretty easy syllabus to put together.
Well, it was an absolute pleasure to stop by.
Yeah.
Tom Lombardi, educating the next wave of crypto founders, holders, thinkers, you name it. It's an absolute pleasure. Thanks for coming on the show, Tom.
Yeah, thanks.
Where can people find you?
Yeah, so Tom Lombardi, Wave Financial. Hit me on Twitter at Tom Lombardi.
Yeah.
We're going to be, we write a lot on our website on Medium. We're doing some research with some other partners. We just published research report with Tezos around digital securities. A few months ago, we published a report with the smart guys at Harmony around DeFi and open financial system. But look forward to more research on our side around the derivatives markets.
Good deal.
And I'm working on something right now for how the RIA stack is not suitable for Bitcoin investment. And this kind of comes back to our second profile, right?
Yeah.
We want to get, this is so important. If you saw the Bitwise RIA survey, very telling, 6% of investment managers are even looking at this space. And there's a reason for that. It's not just education. It's not just it's not just sort of openness for new concepts. It's their ability to compliantly put clients into this. That's where the grayscale stuff comes in. That's where, Reg D, properly structured Reg D offerings. You think it's kind of silly to buy a Bitcoin fund with 2%, 2.5% management fees, but
it's the only way for some.
It's the only way for some, right?
Yeah.
So I'm doing a lot of research around like how we can get more sort of independent financial advisors to compliantly put clients into these assets, and we all want adoption. I think this is a key part.
Cool.
Okay.
Appreciate it.
Thanks, Luke.
Tom.
Okay, man.
Wrapping up.